This is Legal Angle with Emmanuel the Law Holloway. Thank you for joining us for this episode. I have with me today Laura Frum. She's the president of CCDC. We'll be talking about small businesses today and how you can keep your small business afloat during the pandemic and what kind of help and assistance you can get through this SBA and through CDC. Laura, welcome to the show.
Thank you for the opportunity to be with you today, Emmanuel. I appreciate it. I haven't seen you in a little while, so it's so nice to see your face.
Same here.
Especially,
so nice to see you
especially
too.
since we haven't been able to be out and about anywhere lately. So it is nice to be here. So thank you for the opportunity.
Oh, thank you for coming on the show. Can you please introduce yourself to our audience?
Sure. I'm Laura Frum. I'm the president of Community Capital Development Corporation, or CCDC, as Emmanuel said. We are an intermediary for the Small Business Administration. So we are a not-for-profit corporation that works primarily in conjunction with the Small Business Administration, the Ohio Development Services Agency, and a variety of other municipalities throughout the state of Ohio. And really, we are economic development professionals. So our main goal is always to assist small businesses in their financing needs, or any type of change that may occur that they need a little assistance in some direction as to where to go. I'm originally from Pittsburgh, Pennsylvania, went to school in Pennsylvania, and moved right after graduation to Washington, D.C., worked at the Securities Exchange Commission for a few years, and then had the opportunity to move to New York City and work on Wall Street for a few years, working in a trading environment, which I consider to be my master's degree. It was tough, and I learned a lot, and I really learned how to make a decision, and that was really crucial, I think, for my life, the rest of my life in my career. I moved back to Central Ohio, where my parents were, and started in banking as a loan review officer, and started really to enjoy the lending aspect of banking. And I had the opportunity to go to an economic development entity. In fact, CCDC 25 years ago, to kind of start my path in SBA lending. Was there for a few years, and then I was able to get a position at Huntington National Bank, where I was the SBA program head there for 5.5 years. And really, it was important to understand the detail of compliance and underwriting, but I didn't like not having the aspect of touching the customer anymore. So I went to, I got a job at another economic development entity here in town, Ohio Statewide Development Corporation, and worked there for 10 years, really trying to enhance that organization and grow its loan volume. And in the course of my life, I have tended to go back and forth between different industries. So after 10 years at OSDC, I got a job at Chase, working in their SBA group and overseeing SBA lending and eligibility for businesses on the East Coast, so to New York, New Jersey, and Connecticut, which was really a gift in the sense that it stretched my interpretation of what government enhanced lending is, and also sometimes credit. So that helped. And then I was given the opportunity in 2014 to come back to CCDC and help it regain its credibility after years of mismanagement. So that's really where I've been over the last 6 years. And we have been incredibly successful in rebuilding our brand. In fact, we are now the #1 SBA 504 lender in Central Ohio. We are third in the state of Ohio, and we're the 22nd largest commercial real estate lender in Central Ohio. So we have been very, very successful.
Wow, that is quite impressive. Wow.
Thank you.
Okay, so you say you focus primarily with assisting small businesses.
Yeah.
The pandemic has been very hard on a lot of businesses. What programs are out there that you're offering to small businesses that are struggling right now?
Right. So back in March, obviously the CARES Act came out, and that was an opportunity for the federal government to really, touch a lot of small businesses and help them out in the crisis. There were a variety of different components to the CARES Act. There was some debt forgiveness for existing SBA borrowers. There was the Paycheck Protection Program, or PPP, which many people were able to take advantage of. In fact, I was pulling the numbers this morning, and over 5.2 million loans nationwide were advanced under PPP for businesses. In the state of Ohio itself, more than 140,000 businesses received PPP financing. So that was a huge opportunity for businesses to be able to keep staff on payroll and not have to lay off employees and keep going. There was also, as part of the CARES Act, there was the Disaster Loan Assistance Program, or apital, which is another acronym for that. Nationally, there were 3.6 million loans made under the apital loan program for more than $190 billion. Actually, the apital loan program is still open. It's open until the end of December. So if there are people that are still struggling and did not have the opportunity to take advantage of the disaster loan through the SBA, you can still apply through the end of the year. If you just go to SBA.gov, and on that first page that you open, there's a big banner that talks about COVID-19 assistance. So people can apply directly to the SBA for that disaster loan assistance. There was also an apital grant, or an advance on the grant, that was available up to $10,000. And in the state of Ohio, almost 130 businesses were able to get grants up to $10,000 to help them out short term. So there were lots of opportunities under the CARES Act. We were all hopeful that the U.S. government would be working on another economic development plan for the nation's small businesses. Unfortunately, with the challenges in Washington right now with the upcoming presidential election, that just isn't going to happen. There are several different proposals that are turning around Washington, D.C., but until the election's over, nothing's going to happen. I do think that there will be additional assistance coming, but I can't tell you what it looks like because both sides are so far apart on that. But I will say the CARES Act is one opportunity. But the other thing that I will say is, even though that it's a tough time in the credit world for small businesses, it's not a time for small businesses to be quiet. They need to be communicating with all of their creditors, including their lenders, a bank or a credit union, their suppliers, maybe asking for extended terms, and even their utility companies to see if there's an opportunity to stretch out payments that may be due or overdue. So my first recommendation to small businesses is just communicate with the people that are in your business circle, because that is going to be really important. And then also, one of the things that CCDC offers is really a roadmap as to what may be out there. Even as late as yesterday, the state of Ohio had announced a new program that they were putting together, which is going to offer grants up to $10,000 with businesses with employees of 25 or less. That hasn't been solidified, but certainly it's out there. Huntington Bank came out this week with a $25 million new plan that they're going to be focusing specifically on certain categories of borrowers, and that's another good opportunity. The state of Ohio has certain things. The city of Columbus and Franklin County has certain programs. So I always say, if you have a question, please email me, and we can go ahead and try to assess what your needs are and where we can refer you to if it's not something that we can handle.
Okay, thank you. You said the EIDL loan is still available and people can still apply for those?
Yes. Not the advances, but the loan itself, which goes up. You can do it anywhere from $10,000 to $2 million. It's amortized over 30 years at an interest rate of about 3.75%. So if you go to SBA.gov, G-O-V, there is an application portal that businesses can apply through.
Okay, Thank you. And apart from the idea loan, are there any other loans or grants that are out there right now that those who meet the PPP deadline can still avail themselves of?
Um, I think this new program that's being offered through the state of Ohio might be an opportunity. Of course, it's 10,000, so it's not a lot of money. I do think that some of the talk that's going around in Washington is another round of PPP funding because there was a significant amount of money left over when the last round of PPP sunset in August. So I think there is some opportunity for there. But I can't really, I guess, offer a definitive on that. I would say the most important thing that you can do if you have a current loan with an institution is call them and see if you can get some payment relief, whether from deferment or reamortization or rate modification or something. Most lenders are willing to help in this environment, but you have to communicate. Nothing makes a lender more angry than a company going down when they haven't come to them for help and not communicating what their issues are.
Thank you. And what is the SBA definition of a small business?
So the SBA has a variety of different classifications, and this was kind of brought to light when the PPP loan program was offered. In normal times, there are two classification of size standards, and that's really how the SBA determines if a business is considered small and eligible for assistance or too large and not. And so the primary size standard is based upon industry type. So NAICS code, the code that's on your tax return that your accountant puts on there. There's a format on the SBA's website that tells you what that is. If you're a manufacturer or a distribution company, you are graded by employees. So again, there is another grading system that the SBA has that's really specific by industry. But there's also an alternative size standard which can usually be implemented, and that is the business cannot have more than 15.5 million in tangible net worth and cannot have more than 5 million in net profit after tax averaged over 2 years. Now, the clincher here and the tricky thing is, because there's always a tricky thing with SBA eligibility, is you have to look at not only the applicant business, but any potential affiliated businesses that business or those business owners might have. So that is an underwriting task that we have to take on by looking at potential affiliation based upon the ownership or control of other entities by the applicant business or the owners of the applicant business.
Thank you. So can internet-based or web-based business also qualify as small business under the SBA program?
Yes. So the SBA has under its umbrella really three types of loans. The largest loan program is something called 7A Guarantee. And that is where a lender or a credit union makes a loan, and then the SBA guarantees a percentage of it, anywhere from 50% to 80%. And that really is where most of SBA lending comes from. And that type of loan program can be accessed through most lenders and credit unions throughout the state of Ohio. The next loan program under that umbrella is 504, which is the main program that CCDC offers, which focuses on capital expenditures. So the purchase of a piece of real estate, a business condominium, large pieces of equipment, things like that. And that is a participating loan financing tool in which a lender, bank, or credit union makes 50% of that total cost and receives a first mortgage position. CCDC, on behalf of the SBA, would be making 40% of that financing, and then the borrower would be left with generally a 10% equity contribution. So that's the second type. And then the third type of loan that the SBA offers is disaster. And there are two types of disaster loans that are available through the SBA. One is economic injury, which we all felt after COVID. And the other one from besides that is physical damage. So that's the disaster loan program that you get after hurricanes and tornadoes. So really the SBA can function to support a variety of different businesses. So getting back to your question, Emmanuel, an internet-based business or a more service-related business that doesn't have those fixed assets is perfectly suited to an SBA guarantee because the lender that makes that loan has an SBA guarantee backing up the repayment of that. So at the end of the day, if that business defaults and cannot repay the loan, the SBA will give that lender the percentage of the guarantee of what's left outstanding. And so that really becomes the basis of an enhancement to that lender to motivate them to provide that loan to a business that doesn't have a lot of assets.
Thank you. Is there a requisite length of time that a business has to exist before they can seek financial assistance from the SBA or from CCDC?
No, we do loans to startup businesses all the time. And in fact, right now we are doing some startup loans. It's amazing. And it is in certain industries that are not as really affected by the virus. Certainly hospitality industry businesses and restaurant businesses and any travel related businesses are tough to lend to right now because of the circumstance. But I will tell you, there is a huge uptick right now in individuals who have previously worked for another company and had to deal with the uncertainty of employment throughout this crisis, have now decided that they want to start their own business and have the knowledge that is needed to be successful in whatever aspect that is or niche that may be. So startup lending is a little more challenging, certainly, but it is very doable. I will tell you the most important thing, though, if you're looking as a startup business, is your business plan. You have to have a solid and informative business plan, which includes month-to-month projections with reasonable assumptions included. And there are a variety of different organizations throughout the state of Ohio that can help with business planning. There's a great business plan template on the SBA's website for people to start putting that together.
Thank you. I was going to ask you about the business plan, but you already answered that question even before I asked you. So in a situation where an existing business is holding back taxes, would they still be able to get help through the SBA?
Holding back, what do you mean by holding?
I mean, they're holding back taxes.
Oh, owing back taxes.
Holding
Okay.
back taxes.
You know, it really depends on the individual circumstance. Generally speaking, and it's the type of tax that is owed. Sometimes we get into a situation where there might have been some event that created that applicant not knowing or not understanding what a tax requirement was, and so they got behind. What I usually look for is, first of all, what type of tax is it? If it's payroll tax, 941 tax, I'm not as keen to really lend to that because that shows me an element of character or lack thereof of the business owner if they're not willing to cover their payroll taxes. If it's maybe real estate taxes or some other type of taxes that have been long-standing and have been worked out, and now maybe that borrower's on a payment plan with that municipality, as long as we can be assured that that payment plan is in place and it's current, maybe I would consider it. So it really is a case-by-case basis.
Thank you. And how can a new business prove that they're existing? Is it just by registration, or what documents do they have to show that they're in existence?
So generally, when a business starts, the first thing they do is they file the organizational documents with the Ohio Secretary of State, whatever that may be, whether you're going to be an LLC or a C Corp or an S Corp, or maybe even a sole proprietor, but you want to make sure that you have a fictitious name available to you. And then the second step is to go to the IRS website and get a tax identification number, or an EIN. And that's really important. And I can tell you, I've actually been on the phone with companies that were not knowledgeable about these processes to figure out how to do that. And each of those steps maybe took 10 minutes on the phone. They're not that expensive. It's a couple $100 maybe for each. So it's not that hard to do today online. So that is important. Registering the company is the first thing. But the next really important part of that is making sure that you understand who the owners or members or officers are going to be of that entity, and define what roles they're going to play and what control they're going to have, because that's going to be really important in the event if you have 4 people coming together in a business. Everything seems really nice right now, but in 2 years it might not be. So how do you get out of that? How do you pre-plan for some of those instances, so at the end of the day the business can survive?
Thank you. In a situation where you have a partnership, maybe 2 or 3 people coming together as business owners, if they apply for a loan, do you also check the credits of the individuals that are attached to the business or the partners?
Yes. So the SBA rules, and I would say general lending rules these days, is any individual that owns 20% or more of the applicant, the small business that's applying for a loan, has to personally guarantee. When you get into the larger companies that are much more successful from a financial perspective, they can move into the non-recourse market, which means you don't have to offer a personal guarantee. But all of the loans that I look at and that our company reviews, anyone that owns 20% or more has to personally guarantee. And sometimes even if it's a spouse that owns 5%, we're going to look to roll that spouse in as well, because there's inherent control in that relationship. We do check personal credit. It's one of the first things we do. We check business credit too. You can tell a lot about someone's character from credit bureaus, and whether you like them or you don't, they tell a story. And there always may be a reason for that story. And certainly I want to understand that story and see if there's a way to mitigate it. But certainly, the credit score is what it is. It's an indicator of repayment ability. And so we will have to do that.
Thank you. And what kind of projects can people seek SBA loan for?
At CCDC, we are really focused on fixed assets. So again, real estate, business condominiums, large pieces of equipment. The 7A loan program, though, is much more wide open. It can do inventory, receivables, plain old working capital from when you are starting a business, debt refi, business acquisition when there's no collateral involved. So there's a lot of opportunities to be able to do that. Being said that the SBA has a lot of rules, and we've been talking about this before we went live. The SBA rules make up what's called a standard operating procedure, or SOP. And that's about 600 pages of rules that we all have to understand to make sure a business is eligible. And it really goes to what I call the spirit of the SBA, in that we really want to lend to businesses that have the capacity to grow and employ individuals. That's really what it is. So it's important to make sure when you're looking at a potential SBA application that you are considering all of those rules. And most SBA lenders know them pretty quickly. And I always tell people, within 5 minutes, I know if you're going to be an eligible business or not, just because it's the same types of rules and we know how that plays out. So really, it's any type of business as long as it fits the eligibility and it's considered small by the SBA's perspective.
Thank you. So the objective of the SBA is to assist small businesses to grow and to start.
Yes.
Okay. Is there a maximum amount that someone can get from the SBA?
Yes. So, and this is tricky, and I apologize.
Second.
When it comes to the SBA, there's maximum guarantee amounts that are available. If you're looking at the 7A loan, which again, that's the loan where a bank makes a loan and the SBA guarantees a percentage of it, the maximum loan size can only be $5 million, and the maximum guarantee percentage of that would be $3,750,000. Okay, so that's step one, and that's basic. On the 504 side of the equation, the maximum loan is generally $5 million of the SBA 504 loan. But you can also then leverage a larger transaction because a bank would be putting in 50% of that total project. So, if you were looking at a $10 million loan, a bank could be doing 5 million, we could be lending 4 million, and then of course the borrower would be putting in $1 million. Now, if you're looking at an application or a business that needs both types of financing, so a 7A guarantee and a 504, perhaps with the business acquisition that has large fixed assets as part of it, you always want to do the 7A guarantee approval first because the 504 amount can take you a little higher in your availability. There are several waivers to that. Mostly they deal with applicants that are looking at green space buildings. So things that are, hotels that can prove that they are reducing, their economic or their carbon footprint by 10%. So there's a study that has to happen for that. But generally, it's 5 million.
Okay, and is there a general interest rate or that is based on the market?
So for the SBA 7A loans, the SBA only really speaks to maximum interest rates. And that really is to make sure that a business applicant is not getting penalized for using an SBA guarantee loan program. So right now, under the 7A loan program, a borrower cannot be charged more than prime plus 2.25 for any loan up to 7 years in maturity, and no more than prime plus 2.75 for any loan past 7 years of maturity. So there is some control there. For an SBA 504 loan, the interest rate is set by a bond sale that occurs monthly in New York City. So really, that is a different funding mechanism altogether. And it comes from a pool of 504 loans being sold on the secondary market. And right now, the interest rates for SBA 504 lending are the lowest I've ever seen in my career. A 20-year fixed rate, fixed for the life of the loan, is 2.5%, and fixed for 25 years is about 2.6%. So those interest rates are really attractive right now, and I think is what's fueling a lot of our activity in this market.
When it comes to real estate purchase, what is the down payment like under the SBA program?
So generally speaking, under SBA 504, it's 10% down. And I will say on the 7A side, it can be 10% down or less, but there are some additional collateral requirements that are going to come into play. On the 504 side, though, if you're a startup business looking to purchase a piece of real estate, and startup from the SBA's perspective is being in business less than 2 years, you have to put in an additional 5%, or your equity contribution is 15%. If you're a special purpose property, and those are what you think they are, a hotel, skating rink, a car wash, something like that, you have to put in another 5%. So if you have a startup car wash that you want to get financing through SBA 504, you have to anticipate putting down 20%.
What happens in a situation where the small business doesn't have the down payment? Does that mean they will have to forfeit the loan, or they won't be able to qualify for it?
Generally speaking, when we're underwriting the initial loan, we're looking to see that equity contribution somewhere. And there are some other ways to get that. The seller of the property being purchased can take back a loan, so there can be some private seller financing. Sometimes we have borrowers receive gifts from family or friends that they can pledge or put towards that equity contribution. So that is an opportunity. Certainly, if the borrower itself is not putting in the full equity contribution, there better be something else strong in that transaction to get us over the fence to want to do it. And generally, we often pushed the envelope a little bit more on that, allowing it. But I would say in today's world, where companies that have been so leveraged are suffering the most, lenders are going to be more conservative about where you get the money.
Thank you. And what are those evidence that a business will need to prove that they can afford a loan to build? I mean, to show their credibility.
So we generally, if it's an existing business, when we're looking at a transaction, the first thing we do is we get the financial statements of the business itself to see if historically that business is generating enough cash flow to service that debt. I would say within the last year, we are looking at transactions where the proposed debt service is significantly less than what the rent payment is. And that's a huge plus. Because obviously then we know that the business is going to be able to handle that. We also look at the structure of the balance sheet. Does the business have a lot of debt that has to be serviced, which would require, more of that cash flow going to other debts instead of the proposed project debt. And then we would look at the individuals to see what their debt levels are like. Right now, I would say most lenders are underwriting transactions from a global perspective. So they're looking at not only the applicant business, but potentially any affiliated businesses that might be involved, and certainly the owners to make sure that they understand what needs there are, not only to service the business debt, but what type of a distribution or salary do the owners need to be able to satisfy their obligations.
What are those huge red flags that you look out for that could automatically disqualify a small business from obtaining a loan?
Again, the first thing that we do is look at the credit, the personal credit and the business credit. If the personal credit has a lot of 30, 60, 90-day past dues that can't be explained or weren't situational, like a divorce or a death or something like that, I'm going to be cautious about that. Charge-offs are not good. Amazingly enough, bankruptcies don't take you out of the gate. As long as the bankruptcy has been settled and everything that needed to be paid has been resolved, we can move forward. We have to disclose it. And certainly, we want to make sure that credit has been reaffirmed by that business or individual, but it doesn't necessarily end the transaction. And really, it's cash flow that's going to be key. So if you don't have the historical cash flow to service the proposed debt, then we're going to look at, well, what are you going to do differently in the upcoming years that's going to create the opportunity for the business to be able to pay for this debt? Are you adding a new line of business? Are you hiring new sales force that's going to be able to generate new revenue? So we want to look at that. And again, if the business maybe can't articulate that properly, we're going to help them put that together. But if the business doesn't really try to understand or to help in that process of the projections, that's a red flag. I mean, I want to make sure that I'm going to get repaid back. Even though this money is guaranteed by the government, I feel like it's personally my money. And I want to make sure that the loans can get paid back. And you can tell a lot from a person sitting down across from them for an hour and asking them about their business. And that's, quite frankly, the fun part of my job, is to be able to sit down with somebody and pull out of them the history of their business and what makes them happy and what plans they have moving forward. Because most small business owners like to talk about their businesses. So I always think it's fun to try to get that out. And I also think it's really fun if I get information out of the borrower that my participating lender sitting next to me never did, because I like to probe a little deeper and to understand that. So if a business owner doesn't want to sit down with me and doesn't really want to talk about their business, that's a red flag. I want to make sure that I have a connection with that borrower so I can, again, get repaid. I always tell people, from a lender's perspective, the margin of income that we receive off a loan is so small. It's really just the basis over the interest rate principal that we're using. The opportunity of income from a small business owner is infinite. You can't even hold that down. So I always tell people when they get a little prickly about me asking questions, hey, I'm trying to protect the integrity of my loan portfolio and to make sure that you're able to service this debt.
Thank you. And talking about bankruptcy, so which one affects the businesses more? Is it personal bankruptcy or the business bankruptcy?
It doesn't really matter. I mean, certainly there are circumstances for both. I will say, though, the one important thing about bankruptcy, and this is something that has changed in the last year even, if you have an existing SBA loan in your history for you as an individual or your business, and you did not repay it, you are technically debarred from future SBA financing. And we have a system that we check to make sure that you are still able to do that. It used to be prior to this year and our new standard operating procedure that came out, if you had student loans that you compromised or did not pay off, you would be debarred. However, that has changed. So the student loan aspect of debarment has been excluded. But if you do not pay your IRS taxes and you are liened and you go to a facilitator to negotiate down your outstanding IRS bill, that's a compromise. You will be debarred. So it's really important to understand if you have something derogatory in your background as a result of a bankruptcy, let's figure it out at the onset and not get stuck at the back.
Thank you. How about pre-existing litigation that could expose the business to humongous liability?
Well, certainly as part of our application process for 504 loans and also for other SBA loans, there's a disclosure that the borrower and the owners have to make regarding past bankruptcies and current litigation. And then we're going to have to see evidence of what that is and what the ramification could potentially be. A lot of times, particularly if you're an attorney, you get called into lots of different actions just for representation. So certainly that would be excluded. But if there's something else that could cause a detriment to the business or the owner, we're going to want to understand that.
Okay. Yeah, for businesses that are struggling right now and think that maybe they need some financial help, how easy or hard it is to obtain a loan during the pandemic?
Again, I think that's situational. I would say that if you have an existing loan that you're struggling to pay, call your lender, call your vendors, call your utility companies, see what you can negotiate in the short term. We really don't know how long this situation is going to last. I try to be optimistic. I think that hopefully by the middle of next year at the worst, we should have some type of vaccine or treatment available that can help begin to restore the feeling of uneasiness in our country, right? And we can get back to normality, whatever that may be. But there are certain businesses, for example, the hospitality industry, it's going to take a long time for the hotel industry to recover. And that really depends upon business travel. And if businesses have gotten used to Zoom calls and other types of technological advances, how keen are they going to be to send their staff out at a much larger cost? So that's going to be important. I am lending money to businesses now, and I will tell you, as part of every underwriting transaction that we do, we have a COVID questionnaire. We have 12 questions that we ask to see how this has impacted the business. And maybe how did they pivot? How did they do something different in the face of their normal revenue stream declining? A good example of that is a dry cleaner laundromat. You know, people just weren't getting their clothes dry cleaned because everyone was at home and doing Zoom calls. So this business created a pivot where they contracted with local hospitals to do their laundry. So they were able then to maintain a revenue flow outside of what their normal course of business was historically. Advertising and marketing companies, they are booming right now because every single large corporation has had to change its marketing strategy for this year and to do all types of new ad buys and different types of plans for that. So they have been incredibly successful. The biggest thing is I will say, and I'm old enough to say this, we're going back to more traditional underwriting, the 5 C's of credit, where you're identifying that character, the collateral, making sure a business isn't too leveraged. There's additional capital or reserves available if something were to happen and the business hiccuped. So we're going back to that. But businesses are still getting loans approved. And I think there's a segment of the population now that has gotten through the initial phases of this crisis and they're still standing. So they want to make an investment now. And that certainly is helping out another segment. Construction is crazy busy right now. I don't know if anyone's tried to buy wood, but it's 120% more than it was this time last year. There are just certain segments of the population that are really doing well. So I would say businesses looking for new financing, they have to understand what their business model is. If you're an existing business, have you been able to pivot? Have you been able to do something else to keep your revenue stream intact so you can pay your bills and keep your employees?
Well, thank you. And for existing businesses, how can they prove that they've been doing what they need to do for the past 2 years? What do you look at? Do you only look at their taxes or do you look at all the complete financial records?
So generally speaking, for year-end historical performance, we're looking at that business tax returns. We always, though, look at an interim statement. So something, a statement that's prepared usually 90 to 120 days prior to application to kind of see where the business is. In today's world, a lot of time what I'm doing is I'm looking at, say, a company submitted a statement as of September 30th of 2020. Well, I want a comparative statement of September 30th of 2019. I want to see where that business was. And then I want to sit with that owner and understand how the business has changed and how they're adapting to that. And what do they expect for 2020? How do they expect it to end up? To be fair, from a business perspective, 2020 is an anomaly. I don't think that long-term underwriting decisions are going to be made based upon the performance of any business in 2020, but it's going to be an indicator. It's going to be a point of conversation as to how did you survive it? You got a PPP loan, maybe you got an EIDL loan, you were able to pivot your business interest or focus, and that's how you were able to survive. Unfortunately, there will be businesses that don't, and that is going to drive, I think, a whole new level of entrepreneurship, hopefully, and hopefully next year we'll be in a more gracious economic climate where we can help those individuals.
Thank you. Is the CCDC and the SBA offering deferral right now for those with pre-existing loan?
Yes, we are. We actually right now are going through the process of offering deferments, an automatic 6-month deferment to our existing portfolio. Also, the borrowers in CCDC's portfolio, as well as all other SBA borrowers, received 6 months free of payments through the CARES Act from April 1st through September 1st. So now we're looking at another 6 month of payment deferment for those borrowers that are still struggling, particularly in special industries where they just don't have the revenue to be able to make those payments. And generally speaking, then, if we are looking to defer payments for some of our borrowers, that should give the participating lender in the 504 loan program an opportunity to potentially defer as well. So we're looking at that.
Are there current existing loans that the SBA is helping the borrowers to pay at this time?
I'm sorry, tell me that again.
Are there any kind of existing loans that the SBA is, I don't know, the SBA is helping borrowers to pay at this time?
No. The CARES Act forgiveness payments ended on September 1st. So right now, there is no other assistance available. But again, that's something that is being discussed in Washington. So I don't know what's going to happen after the election. There are two camps in Washington right now, and it's not just one party or the other. But basically, there is a camp that wants to do another round of PPP financing because that was direct to businesses, and there's money left over that's been allocated to that program. And then there's another camp that really wants to do another round of CARES Act payment forgiveness, because that was, again, another way for those borrowers to be successful. And as a plug, I would say, because CCDC only exists on the loan fees that we collect on the portfolio for loans we make, I was tremendously worried at the end of March, if all of my borrowers were going to go on deferment, I wasn't going to get any money because no one was closing loans back then, and we were only surviving based upon the servicing income that we received from our portfolio. So if we deferred all those payments, we wouldn't get anything. And so it was very life-saving to our organization as a small business to have those CARES Act payments continue to be made, because I was able then to keep my staff in place. So I didn't have to lay anybody off.
Can small business owners also apply for line of credit through the SBA?
Yes. So under that heading that I talked about, 7A guarantee, there's a subset program called SBA Express. And it's another guarantee product where the SBA guarantees 50% of a loan that's made by a bank or a credit union. And that loan amount can go up to $1 million right now through the end of the year. It used to be capped at $350,000, and now you can go up to $1 million. And that's a revolving line of credit that you can use. It revolves for 3 years, and then it gets termed out over 4 years. But it is an opportunity for a small business that qualifies to have a revolving line of credit that has that enhancement attached to it.
Thank you. And for businesses that already have like a line of credit, can they expand the line or can they ask for an increase?
Yes, they can ask for an increase, or they can ask for a second line. The challenge with asking for an increase is depending upon the approval status of your lender. You may have to have your application go to an SBA servicing center to be approved. If it is a lender that has an accelerated or preferred lending status, they may be able to handle that increase in-house, and it wouldn't take that extra time. But certainly there's the opportunity to do a second line of credit.
Okay. Is there any kind of loan forgiveness under the SBA?
Right now, the PPP loan program is the only loan program through the SBA that's offering potential forgiveness. And I would encourage any business owners that have a PPP loan to start your forgiveness application process now. There has been a lot of talk in Washington as well about automatic forgiveness for any loan $150,000 or less. But again, that's one of those things that's not going to be decided in the near term. And you have to have your forgiveness application submitted by the end of December. And there's going to be a huge onslaught of forgiveness applications submitted to the SBA in December if there's 525 million borrowers out there that have this assistance. And generally speaking, most of the larger banks have a portal that you can go on to and complete your forgiveness application. There are different types of forms that are currently available. There's the first forgiveness application, which was for any size loan. There was another revised form that came out, what was supposedly easy, that was for loans 150 or less. And then in the last 2 weeks, the SBA and the Treasury Department has issued a new application of forgiveness form for loans of $500,000 or less. And I would just say that the forms themselves may be easier, but the information that you have to provide to document your forgiveness is exactly the same for each of those. So start putting together your information can start beginning that process now.
I have a question here from someone who says they are a small business, they sell cosmetics online, they make about $12,000 a year. They're asking, will they be qualified for an SBA loan?
Potentially, the SBA has another type of loan program in that 7A guarantee spectrum called a microloan. And there are several organizations throughout the state of Ohio, but the most well-known organization here locally is called ECDI, Economic Community Development Institute. Sorry, I live in acronyms. And they are here locally, and not only can they provide smaller loans, but they can give you the technical assistance you might need to make sure that your business stays on track. I would also say that there are small business development centers, or SBDCs, throughout the state of Ohio that can help you with business planning and also accessing smaller amounts of credit.
Okay. And how can people get in touch with you? They have more questions or they want help from the CCDC.
My email address is located on the banner above, laura.frum@ccdcorp.org. Our tagline is Small Business Financing Solutions. So if we can't help you, we're going to take you or give you the referral that you need to the best place that's going to offer you success. In the world of economic development, there are lots of programs that are out there. Some are good, some are not so good to access. So what CCDC tries to do is to be honest with your circumstance and to give you the best referral possible.
Oh, thank you, Laura, for coming on to Lilando.
Thank you, Emmanuel. Good to see you.
Good to see you too. And for those of you watching or listening out there, thank you for joining us on this episode of Legal Angle with Emmanuel the Law Olawale. Until next time, stay safe.